Hey guys, what's good? This is Andre and today I want to go over a couple of stock picks with you guys. I want to preface absolutely everything by saying that these are not indications to buy or sell anything. They're simply here for your enjoyment, and then obviously if you can learn anything out of it, that's perfect, but please do your own due diligence, do your own research and pick your own stocks when you want to start trading or investing. Now, I'm gonna just go over a couple of different picks that offer a good enough risk to reward ratio. So let's get started, guys. I'm gonna start out with Google, and I just want to remind everybody that what you're looking for when you're trading is to have a good enough risk to reward ratio, to have a good enough edge, and then obviously you're always going to have losses. Get that in your mind. It's nothing that you can run from. What you need to focus on again is just having that good enough risk to reward ratio and having a big enough sample size so that eventually you even out in a profit, regardless of kind of having maybe even a 50-50 win to loss ratio. As long as you have a 2-to-1 risk reward ratio, you're gonna be good. If you can make it 3-to-1, that's gonna be golden. Now, for Google in this instance, you guys can see that we kind of have this channel here that's been forming, and I think that we can also take a horizontal support resistance line over here that's gonna be just as valid. It's definitely an area of interest, and I kind of encourage all of you guys to move away from the idea that support and resistance needs to be an exact spot on the chart or an exact line. Think about it more as areas, and honestly I encourage you to start by just using a very thick line when you're drawing support resistance, or alternatively even use like a rectangle to describe a zone. Obviously this is not the zone, I have the magnet on here, but the zone would probably look something along the lines of this area right here. And so with that in mind, guys, we can now start planning out our trade. And obviously, again, it's something that I always encourage you to do. When planning out this trade, I want to make sure that our stop is both above kind of the upward sloping channel line over here. So I would probably say 112.5 or maybe 113 to be on the safe side of things. And that's gonna give us a maximum loss on this trade of roughly $5. Then for the take profit, I want to obviously you can, if you size correctly and if you want to leave a couple of shares on the sidelines and kind of try to ride them all the way to this bottom channel or the bottom line of this channel, that's perfect. But if not, I think the minimum you should be aiming for is kind of the 101 to 100 range over here. First off, $100 is a very round number. Everybody's kind of going to be drawn to that round number. Secondly, we have the 200-day moving average that's starting to reduce its downward slope here, so I think it's gonna probably provide some sort of support. As you guys can see, we have roughly a 2.14 risk to reward ratio for this, so you can exit half or 3/4 of the position here, and then you can leave some shares on the side for a higher risk reward ratio. That's kind of it for Google. I want to show you guys United Health, which is currently showing kind of a bear flag over here. So you can see the pole and now it's starting to flag. Now guys, the way you need to actually play this type of setup is to start or to buy, to enter, to short actually, to sell, to enter your position once the flag is broken. So if the flag is going to be broken to the upside, we are not going to be taking any sort of a buy here, because we want the bearish flag to be confirmed. And so we're going to be waiting for the first candle to close below this trend line, below the channel, and then we're going to potentially be able to profit. And the way you usually measure a bear flag like this, you probably know, but you usually just duplicate the pole from the breakout zone or break below zone. So let's say it takes this long for the price to break. We're going to take the pole over here and just measure it down, and that gives us roughly $450. So it's gonna be a $40 move potentially that the stock is going to be making once it moves out of this flag that's currently being formed. Now, obviously, we don't want to be as aggressive as that. I think we're going to be able to short here with a pretty tight stop. So let's say we short and we place our stop kind of at the middle of the channel there, just to leave some room for potential error and not be stopped out too fast. And then if we move our take profit area all the way to kind of previous lows over here, the previous swing low that we've had, we are going to have a 3.42 risk to reward ratio, which is pretty sweet. You definitely don't need to be more greedy than that. And if you want to kind of have 1 or 2 shares, this is an expensive stock, so if you want to leave 1 or 2 shares to kind of let your runners run, I think that's not the worst idea, but otherwise look at taking your profits. Let's look at XLB here, guys. For XLB in particular, I don't have a setup yet. I'm just looking at it. I think it's starting to set up for a potential exit. If you take a look, guys, at the volume here, it's dimming down as we're moving through this part of the play here. So I think we have a functional triangle here. It's a symmetrical triangle. So again, with triangles, we're not looking to play kind of the inside noise. We're looking for the breakout. So if this is gonna break out from inside, that's perfect. If it's gonna break out from the above, we're gonna take a long. So in this case, it's different from the flag. If it breaks in either direction, we're going to be looking to play that direction. The way you measure a triangle is by doing this thing over here from this bottom to the top of the triangle. And again, we're going to measure out the break down, so potentially to $70, or the break above, if that's what's going to happen, roughly to $90 or $89. And again, don't look to be too greedy here. Let's play the breakdown version here for a short. We're going to be placing our stop at the apex of the triangle, so roughly $79. That's gonna give us around $2 worth of risk for a potential, let's take again the previous low, the previous swing low here, for a potential gain of roughly $3 or $4. So that gives us a 2.3 risk to reward ratio. And again, this being a cheaper stock, you can definitely hold out to maybe a 72 or even $70 target here on the stock price. Now, moving on here, I want to take a look at the XLK. And by the way, XLB was the materials sector ETF, and XLK is the sector ETF for technology. So in here, as you guys can see, it's pretty straightforward. We have kind of a triangle setting up here as well. Usually these types of triangles that are so skewed to the upside with a horizontal line tend to finish or to resolve themselves to the upside. Now we need to wait and see, but basically if we're gonna have a break below, we can easily, again, let's pretend it breaks here, we can easily again take a trade that's gonna have a very tight, very clean stop loss at roughly $153, let's say, and then you're gonna aim at taking a first profit, maybe somewhere around here. It's not gonna be the best risk to reward, it's gonna roughly be 1.3, and then you can probably aim at taking the lion's share of the profits over here at the 200-day moving average, giving you a 3-to-1 risk to reward ratio. The next one I want to look at is Visa, guys. Visa has been hitting its head against this 325 or 235, sorry, resistance line over here so many times throughout the past, let's see, roughly 2 years and change. So it's a very important area. I think that I'm going to be playing this probably with a bear put spread. For anybody using options, that's gonna be something that rings a bell. But again, you guys can simply, I would probably wait another $1 or so of upside. You can have an extremely clean stop loss here of 1%, and then you can play for previous swing low at roughly a 4-to-1 risk reward ratio. That's pretty sweet. And again, we don't need to overcomplicate things, guys. Take as many of these trades as you can, have a tight stop loss, have a good enough risk to reward ratio, and eventually the numbers are going to play in your favor. It's a long game that we're playing here, not a short-term one. For IBM, it's interesting that it's been respecting this trend line here ever since January 2021. We're bumping against it again, and I think from here we can take a long position. Again, we have the stop loss extremely close. I would probably not have the stop loss immediately against the trend line just in case it kind of spikes below to grab some liquidity, but I think you can probably place it over here and give yourself $5 worth of risk on the downside, and then we potentially have back to the swing highs a 2.5 to 1 risk reward ratio. If you want to be a bit more greedy here, a bit more aggressive, we can wait for this 138 important area of support resistance, sorry, over here. This is gonna give you almost a 4 to 1 risk reward ratio. Cool guys, let's see, the next one is going to be X. X is really interesting, especially for those of you selling puts. I may do a separate video on this as well, but again, kind of a similar situation where we have a pretty sweet channel forming over here for X that it's been respecting for over a year now. We have this other support area over here as well that it's been respecting for quite a long while, almost 2 years. Obviously we moved slightly below it, but not the end of the world. I would rather play this one with options and sell a put here, probably a $20 put. You're making roughly a 4% ROI monthly on that $20 put, but again, that's the subject for another story. And the last one that I want to show you guys here would be Dollar General. So for Dollar General, again, it's a short position. I do feel like most of the stocks that I've been looking at are setting up for a short move here. As you guys can see, we've had a doji candle forming yesterday on the daily, and there's just such a sweet short clean stop over here. I think we can go right above this Fibonacci that I've drawn over here. It's above the previous swing high. It's slightly above this gap that formed over here. So hypothetically, there's a lot of demand still in that area. And we're going to be looking probably to take profit at the previous low over here, giving us a whopping 4.5 to 1 risk reward ratio, guys. I'm gonna cap this video. I don't want to get it too long, but if you guys have any sort of questions or any stock picks that you would like for me to cover, I would love to see that in the comments. Let me know if you have any questions. Thanks so much for tuning in, subscribe, and I'll catch you next time. Take care, guys.